In today's video, I am going to be breaking down my picks for the top 5 S&P 500 stocks right now. These companies I think will be great currently, but also in the long term. So let's get down and let's check these out. First off, a lot of these names have a lot of momentum going right now, but especially Ford. Ford is one of my picks. Now, why is Ford one of my picks? Well, first off, there's a very good reason for this. They have the Mustang that is all electric, but they also have that new F-150 that's all electric as well. And I personally think that they just may beat Tesla to the market with an all-electric pickup. Now, I'm not too sure if the F-150 electric is going to be able to outsell the Tesla Cybertruck. I really don't know. However, with all of this money that is currently being invested into Rivian, into Tesla, into all of the others. Lucid is another one. All of this money going into electric vehicle investments. And then there's Ford, who is currently one of the leading traditional historic companies when it comes to cars, and they're getting into electric. So that is, to me, an interesting idea where they are currently almost $20 a share at the time of making this video, and nobody's really talking about that all that much. They currently pay a 2% dividend, which is pretty good, and they have an average volume of around 79 million shares being traded every single day. From there, when it comes to their PE ratio, when you're looking at other electric car companies, they are definitely really cheap. If you're comparing them to other car manufacturers, they're about roughly average. If you look at their 5-year chart, we can see that, of course, they just absolutely got dumped right as soon as that virus started. And since then, look at the volume. Look at the volume from before to the volume during the big meltdown that happened, and then the volume since. The volume since has been huge on each of these upswings. And because of that, I personally believe that this may have a little bit to fall, maybe a good 5%, maybe 3%. Once it starts cooling off at least, and the momentum kind of basically goes away, and we can see when it comes to the MACD that the MACD crossed, and it doesn't seem like it's going to be crossing anytime soon. So, because of that, this could still run for the next potential week or so before it starts to have the MACD cross, and as soon as that happens, we're going to absolutely have a fantastic time to buy. Don't do it as soon as it drops. Wait a couple of days. Wait till a couple of days after that convergence happens, and then it's going to be an absolutely ridiculously amazing time to invest in this company. Now keep in mind, they have not paid a dividend since January 29th of 2020. There are a lot of people who are thinking that they may be starting their dividend once again, and it sounds like they're going to be doing so on December 1st for 10 cents. So keep that in mind. They at one point paid 40 cents a share as a special dividend, and then they also had another time where they paid a 20-cent special dividend. They were paying 15 to about 28 cents, depending on, of course, they do once a year special dividends usually, but they have not paid for a while because of course, the chip shortage and the pandemic. So because of that, they have lowered their dividend to 0, and now, of course, they're starting it back up at 10 cents. So keep that in mind. When it comes to their earnings, of course, 2020 and 2019 were not that great of years. We have to remember that they still make revenue. Revenue didn't happen really all that much in 2020, but when it comes to their earnings have been going down because they have needed to invest in themselves because, of course, Tesla is killing it right now and really taking it to Ford, so they need to invest in electric vehicles. However, they have had 4 quarters in a row where they have beat estimates, so that's a good sign. Another great company is Seagate. Seagate, of course, makes a lot of tech stuff, hard drives being one of them, and of course, there's always going to be a shortage of hard drives no matter what. We can never get our hands on enough of them, and they pay a 2.6% dividend. We have to remember that computers are here to stay, whether it's in your pocket or what I'm currently recording on with right now. With a 2.3 million shares traded on average every single day, currently at the time of making this video down about 2.25% at $105. It's currently had a little bit of a run, and it just crossed very, very, very recently. We should really look at that because check this out. This had a very long downturn. During that downturn, we can see that it was kind of bumpy during that time. Well, guess what? It just crossed. And look at the last time it crossed. Look how much of a gain it had. So, let's hope that this continues. Obviously, they're getting a lot of volume, or at least a good amount of volume, so this could actually run some more. Over the past year, we can see that in the past month or so, it's really accelerated to the upside. They also consistently raise their dividends, which is always good news. Kind of interesting how their revenue has really stagnated, but when it comes to technology, we have to remember that, of course, there's always going to be new technology coming out, and they're always going to be competing against each other. Next is Occidental Petroleum. This is another interesting company, OXY. It pays a very, very, very small dividend. I would assume that they would eventually raise that up as well because, of course, oil is starting to do really well. It has 17 million shares traded on average every single day, and the chart for 1 year looks kind of interesting because it's been trading sideways. And now, if we actually kind of make a line like this, we can see, if we can just make that line just a bit better, that it's currently come down back to where its support is essentially at. Could it accelerate from here? Well, we have to look at the MACD, and will the MACD show us any hints? Well, it's starting to come back to zero, and of course, it is starting to widen out, which means that there could be some more downwards pressure. It's going to be interesting, and I would definitely be looking at the MACD before investing in it, but there is a lot of momentum in this stock right now, at least from what I have been reading. And in the past 5 years, we can see that there was a massive downturn, and it really hasn't recovered yet since that virus starting. However, it was on a very good trajectory downwards beforehand anyways. So oil, we have to remember, is a major proponent to this stock. They have also lowered their dividend, as I mentioned, but they were at 79 cents beforehand. When it comes to their earnings, they've had 3 out of 4 beats, and of course 2020 was not a very good year. JP Morgan is another interesting company. I personally absolutely love banks. JPM is amazing, and 2.4% dividend. I love the volume, and the PE ratio when it comes to banks is on the lower end, which is fantastic. I usually like to really pick up banks when they're below 11. Below 10 is even better. So with it being at 10.5, it's not too bad. It's actually a good area, in my opinion, to pick some up. Obviously, they've had a big run. So if you could get into a stock like this in an ETF that is a covered call, for example, ZWK holds a very small portion of JP Morgan, then it's a very good option if you're a Canadian investor. There's obviously options down in the States too, but covered call options after a stock has made a big run is usually an interesting idea to really have, because you know that the companies are very healthy, but you can then get some extra premium if you're investing in it for that, of course, return. They've also raised their dividend recently from 90 cents to $1, and before that was 80 cents to 90 cents, so they do like to raise dividends too. They've had lesser revenue and earnings over the past year, but they have had 4 beaten quarters, which is fantastic. Before the virus, they were accelerating their revenue and accelerating their earnings, which is what you really want to see. Moderna, of course, everyone has a hate on for them. That just happens when you make a second place medicine to another company. And of course, average volume is up there huge. They don't pay a dividend, which sucks. But of course, I think there's a lot of momentum that goes with the stock. And we can definitely see that there is a lot of momentum. There's also a lot of a pullback too. The only issue is there wasn't a ton of volume on that pullback. So that tells me one of two things. There could be some more of a pullback, and what I would definitely suggest looking at is this right here. And I've said this all video is the MACD. Wait for these to cross. As soon as they cross, definitely buy. I also kind of found it interesting how Moderna has mRNA as their ticker symbol. And when it comes to their earnings, they've had 2 beats and 2 misses, and interestingly enough, huge revenue in 2020, but very low earnings, negative earnings in fact, which to me is interesting. I wonder why they're pushing all of this stuff when it comes to Moderna and Pfizer. Clearly, they have not made any real profit from what's going on in the world right now. So to me, that tells me a lot of things. If you look at the news, I can't say what my thoughts are because I'll probably get demonetized. But if you can put this together with what's happening on the news, what you hear from government and everything else, kind of makes you think. Anyways, I hope that you've enjoyed today's video. If you have, hit that like button, subscribe, and I'll see you guys again next time.